When the night sets in deep, when you're lost, come to me, I'll be there. When your pain doesn't ease, I'll be your remedy, I'll be there. I'll do whatever to make you better, my darling. I just wanna let you know, no matter where you go, you won't ever be alone, yeah. I just wanna let you know, no matter where you go, you won't ever be alone. I've seen the rules.
What's up, guys? What's going on? What's going on? Just give me one second to get situated. I'm going to put chat in the browser. Hopefully everyone's doing well. Hopefully everyone is still in one piece. Cool. Should be good to go. All right, how's the sound? Give me a quick sound check. All right. Quick sound check, background music, microphone, all that. Sound check. Music volume too loud. Okay. So one person said it's too loud, everyone says it's all good, so. Cool, all right guys, welcome. As I said, I hope everyone is doing well. I know that might be a tall ask, that all my followers do well, all the subscribers do well, because what happened in the last 2 days was nothing short of cataclysmic. So there's a lot to unpack. We're going to get into all that. We're going to touch on Bitcoin. We'll obviously talk about Luna and UST. And then we'll talk about some alts very briefly. I don't think that there are really any individual opportunities as much as there might be a broader opportunity setting up for, possibly some mean reversion to the upside, but we'll get into that because I'm not saying that and then saying like this is the place right here to long alts by any means. So we'll get into more detail with regard to that. Before I get started, for those of you that are new, my name is Ryan, also known as Cameron Clark on Twitter. Myself and my partner Josh Rager were the co-founders of this channel, co-founders of BlockRoots. We have something new coming out in the next month that we're really excited about, but this channel we're a lot more active on now. I'm going to be on here, and I've been on here now consistently every Tuesday and Thursday, 1 p.m., and then I do a call-in right after. So for those of you that are watching the stream and have questions, I might miss your question, maybe you want to ask something to me directly, have a little bit of a conversation, Call-in is a phenomenal app, similar to Twitter Spaces, but it's recorded. And it's also available on Apple and Spotify podcasts. So right after this, at 2:30, I'll be hosting that, give or take a few minutes, depending on how long this runs. So I could take a short intermission, so you guys can take an intermission as well. And then we'll have a live chat. And if you guys, again, want to just talk about anything, we'll shoot the breeze. We'll talk about the market. We'll talk about the Mets. We'll talk about whatever, right? Before I get into it though, just formalities aside, none of this is financial advice, right? Strictly for entertainment purposes only. You should not follow people on the internet when it comes to your decisions with your portfolio. I know that's that's unrealistic to ask of people who are following large accounts and who are following people that have experience and navigate the market well. it seems like, yeah, you should absolutely follow someone who has experience doing this and again, navigating what is right now very treacherous seas. But myself, right now, I could tell you that I am sizing down tremendously. I have fallen back on what I do whenever conditions are like this, which are just stick to A+ setups, and I am paper handling a lot of positions. Not paper handling and actually opening a lot of positions right now, but I will be paper handling a lot of positions if it comes to it. So what that means is if I share something on this stream, if I share an idea, if I share something on Twitter, my invalidation a lot of times is based on feel. There's cases where it's based on market structure. There's cases where it's based not on market structure, but on levels of volatility. So a lot of that is very nuanced, and it's very easy for me to be confident in something and then do a complete, 180 on that. And if anything, that's what's kept me alive, and I've managed to not get hurt by this debacle at all. And that's for reasons that are different than, what we normally talk about with respect to technical trading using profile and order flow. It's a whole different ballgame, but I'll briefly touch on that. I've been shorting Luna for a while now, but, I also shorted it on the way up. I just, I don't have a lot of confidence in putting my money in something that I can't explain in less than a couple sentences. I prefer to trade asset go up, asset go up, asset go down. But anyway, okay. So we're going to cut into it. Again, if you're not a subscriber, make sure you hit the subscribe button because we're going to be doing these frequently. And I think we have a lot to offer. Completely, for those of you that have been following me for a while now, I'm a New Yorker through and through. Greek and Italian New Yorker, straight talk, no bullshit, don't pull any punches. I know that will probably frequently get me in trouble, but it is what it is. No fluff. If I don't like something, I tell you I don't like it. I change my mind often. And yeah, there's no sensationalism, which I think is something that's not frequently found on YouTube, not common at least, in more of the popular, social media conduits. So before we get into any of this, let me just switch the screen, move the chat. So I talk about this frequently because we have been partners with Phemex now for going on 2 years. There were a few stories yesterday. I'm not going to name names or name exchanges. Well-known exchanges, top 5 and top 10, 2 exchanges that were, during periods of increased volatility, it's tough on everybody, right, to handle the load, especially as crypto volumes have increased and the user base has increased. So you're going to have issues, but how you handle the issues is really important. And one thing that I can absolutely say, and this is a sub account on Phemex, and again, you could use sub accounts. You could have 20 sub accounts if you want different strategies, whatever. They offer 200 spot perp pairs, right? So you have a depth of spot pairs, perp pairs, yield. But the most important thing that I think about when it comes to this exchange is that, and I know this is going to sound like a fucking shill, but is the customer service. That's the most important thing. It's the Chase Bank of exchanges, because shit is going to go wrong no matter what. Shit goes wrong on FTX. It goes wrong on Binance. It goes wrong on Coinbase a lot. And what you don't hear about are all the little things that go wrong. What you hear about are the times where little things went wrong and they were not addressed properly. The exchange did not take responsibility for certain things that it should take responsibility for. There's no accountability. So Phemex is known for their customer service, okay? And they run a phenomenal exchange. That is a standard at this point. The bar is set where you have to have something where execution is near flawless, where you have a ton of different products, and most importantly, you have the liquidity. So it has all of that, and then it has that, extra little bit that comes along with having, attentiveness by the people that run the exchange. So the link is down below. It's Phemex.trade, and that'll get you access to any of the bonuses that they currently run. And also, let's say that you are listening to this and you're tired of KuCoin, you're tired of Delta, you're tired of Prime XBT. and you use Phemex. I can't tell you how many times that people have actually reached out to me and said, hey, I'm having a little bit of issue, and I'll go ahead right away and I'll reach out to the team, and things have been, smoothed over. Okay, Vishnu Reddy. Gotta love how Americans are always shilling stuff. Listen, you got a partner. I mean, what does a partner imply? You don't have to be a genius to figure out what it implies. Yes. So very good. You're brilliant. Nobody cares what you have to say. So that being said, let's get right into it. There's a bunch of links below. If you don't want to use this shit, you don't have to. And you can comment all you want. It's a free country here. You can say whatever you want. But again, no one will give a shit. All right, so first things first, I want to touch on a couple things. The chat will eat you alive, man. Legacy. So we had CPI. So for those of you that watched the last stream, the setup that I gave in the stream played out almost to a T. So you had the first move that is always fade worthy. But as I mentioned in the stream, and the stream notes also that are available to everybody, if the first move is to the downside, it's going to be a little bit iffy about when it comes to where we fade it, because the market is very sensitive right now. Anything that comes in, and this wasn't the case that it came in hotter, right? CPI came in at 8.3 instead of 8.5, but it still came in above expectations. So we had to move down, but it broke past what I said would be my sort of mechanical threshold for a take profit. So market in right away. Ended up taking profit just over 100 basis points. So I always say 100 to 150 basis points. And then it ran. It ran over, in this case, I think it continued to run down, obviously. But initially, in the first half hour of the move, it was down 5 to 10%. Can't remember exactly how much. I mean, we could obviously look at it. But it's right here. So first 15 minutes, we're down over 5%. And then, follow through up to just around 8%. So normally I'm looking for the reversal anywhere between 1.5 to 3%, and this overextended. So this is a case where I backed off, trying to catch it as aggressively as I normally would, and ended up buying on the turn, but it never got the complete follow through. So what we talked about in the stream, and what I talked about, and again is summarized in the notes that 17 bidding provides, is you normally get much more of a slingshot. Because as the market moves down, let me just open up the tool real quick. As the market moves down, waiting for the drawing tool, here we go. As this happens and you trigger orders, you immediately start triggering take profits in this region, trailing stops, and OCO orders, right? So, okay, I'm marketing in, let's say, conditional right here on the break, I'm good. Immediately stops are placed right behind positions. So usually the reversion is much more violent because you have all that sort of built-in pressure in the opposite direction. And in this case, you didn't get that at all. You just got to move back to basically entry. And more commonly what I said was, if this is entry point and moves up or down, doesn't matter. Usually you're getting a much wilder throw in the opposite direction past the origin of the move. So this was, again, different. The same way that FOMC recently was different. CPI offered a different response as well. I think that when it comes to the macro, it's still a case of don't fade the Fed, right? Don't fade the Fed. This means that unless they completely change their language, so unless things become much more dovish, or they actually walk back, and we're not even into the unwinding of the balance sheet, or they actually walk that back, right? Which they haven't even began yet. So it's not an accommodative environment, and Bitcoin will not bottom until we actually see a shift in the overall regime and environment. So don't fade the Fed. It works the same in both directions. I think that this is an area where you could expect possibly some mean reversion because it has been a pretty extended move to the downside, but there's a few things that I would want to see before I even call bottom. As a whole right now, I don't think this is the bottom. I think that we have lower to go. I think you have sort of the sentiment that you would want to see at a bottom. People thinking it's, crypto is sort of a failed experiment. The market is breaking, capitulation across the board. Things can go much lower. This is what it feels like, but this doesn't mean that it has to occur in the next 24 hours, the next 48 hours. it could feel sort of grim and morose for a period of months. Anyone who's been around multiple cycles know that it's not something that lasts, just a period of weeks. If we do bottom, it's going to take a while. So that's another thing to mention as well. This is, from a contextual risk reward standpoint, a great location, right? From contextual risk reward. So why? Because it's so cleanly defined. So cleanly defined because there's really nothing under it. This is pretty much a gap. All right, so pretty much a gap in that if we accept in this region, it's very easily to trade to the lower prices back to all-time high and even lower than that, right? I think with what's happened recently, you should get accustomed to the fact that things you don't expect to happen actually happen quite frequently. So what models and statisticians might say only happen once in a trillion years actually happen every, year in markets. So, this kind of 5, 6, 7, 8, 9 sigma event actually happens quite frequently. So what you think can't happen clearly can happen, multiple times over. So from a contextual risk reward standpoint, oh yeah, it looks great, but it's going to require a lot for me to get really bullish on the market, considering it's not trading on its own right now. It's not trading in a vacuum. It's purely legacy driven. This is purely legacy driven. If you're a portfolio manager, if you're a fund manager, you're making a decision whether or not you sell things that you don't want to sell, right? You say, okay, I have, let's say you're someone who has crypto exposure and legacy exposure, and, you have leverage exposure across all markets. Are you going to be protecting your Bitcoin position and sacrificing your Apple position, or are you going to be sacrificing your crypto positions and giving to your Apple position? So, that's what happens to things further out the risk curve. They get cut, they suffer the most, and we're seeing that this is primarily just beta right now to the S&P. So if this is a great contextual risk reward standpoint, that's great. If you trade it at, just if it was purely based on textbook setups, but we're not in the driver's seat right now, and the market has momentum. So fading that's just based on that, not a good idea unless it's for the short term. That's why I got long yesterday and scrapped it basically on a $1,000 move. So we haven't seen the balance sheet unwind yet. Legacy is in the driver's seat. And if this is going to bottom, it's going to take a while. You're going to have a long period of sideways movement. Honestly, if this was just to do something like this right now, I would be looking to short this as aggressively as possible. It's very unlikely that we have any conditions for a V-shaped reversal. We don't have the open interest buildup, and we don't have any kind of accommodative monetary policy. This is going to lead to a massive injection of capital. The only thing that can happen is something where there's some kind of major catalyst, and I say this frequently, like it has to be like a central bank saying they're going to buy BTC. It doesn't seem like we're looking at any of that on the horizon, okay, or at least in the near future. It'd have to be a major flight to quality, and we had a flight from, two things recently, and it didn't prop up, or it could be propping up BTC to some extent right now, but it'd have to be like Tether experiencing more FUD, and then something that is very idiosyncratic and leads to all flows going to BTC. Otherwise, this is purely macro driven, and if it just moves straight up like this, it's mean reversion, right? You have a very significant drawdown. Mean reversion is something that we see happen on all time frames in crypto. The more violent the move down, the more violent the move up. But the problem is, again, you don't really have any fuel down here. From an open interest standpoint, it's not like we've seen a massive piling of shorts into this location. This was a very spot-driven move. That's why funding was positive. It's not that derivatives were buying a dip. It was that actually funding was positive because spot was selling much more aggressively. So just to get that out of the way, okay, briefly talk about everything that's taken place in the last 48 hours. And this reminds me of something, you could think of the concept of too big to fail, or you can think of something very specifically with respect to markets going back. This is going back almost 2 decades ago, or even 2 decades ago. Can't remember specifically when this was. I believe it was in what exactly was the date for long-term capital management? No use in trying to guess. You just look it up. Long-term capital management, right? The book When Genius Failed. I think everyone should read the book When Genius Failed. These were Nobel Prize winners. These were the brightest mathematical minds that you could throw at any problem. Okay, so they had this brilliant, flawless, arb approach to markets. Right? That was their bread and butter. They were a hedge fund, and they were basically just arb seeking, or took advantage of arbitrage. They blew up, right, when there was a Russian default. They blew up. They had to get bailed out. They were the brightest minds who, very much like we saw, had a level of hubris that does not go unpunished in markets. And this is like a constant reminder. The worst thing about what took place with Luna is not the complete demise, honestly, of the actual coin Luna, right? This traded down. It's delisted now. So Binance delisting was under a penny. It's delisted. So this is not something that you should go buy the dip on if you have the chance to. There's no liquidity. It would probably cost $1,000 to move the book 100%. Now that's probably a gross overestimation, but I think you get the idea. This is not the worst part. The worst part is that this was connected to, obviously, UST, which is the stablecoin, which yielded 20%. And this is why I didn't get involved in it or park any serious money in it. Very long ago, I put a little bit of money in it, but very quickly took it out because I just have a fear of smart contract risk. I'm very much a skeptic when it comes to anything that is a long-term play that is not Bitcoin or Ethereum. All right. So this is something that a lot of people put money in under the impression that a stable coin was going to be stable. And that's the worst part, because there were people that were actually pulled into this market. They were pulled into this market, again, under the guise of, or again, under the assumption that this was a great place to generate yield in a high inflationary environment. My savings account doesn't get me anything. Your checking account, your money market account gets you nothing. So this was something that maybe was amongst a bunch of other cryptos that seemed to be risky. This was the least risky option in the market. Now, there's one thing to remember. By entering crypto, you have access to these risk-adjusted returns and this risk premium because it is a very risky market. Okay, your participation, your entrance into this market alone, that is what you're putting up. So you deal with a bunch of different risks in crypto. You deal with risks that are expanding now as the market's maturing. Earlier it was liquidity risk, counterparty risk. Now it's more, we have regulatory risk. Now we have interest rate risk. We always have systematic risk. Okay. The one thing that you always control, though, more than anything else, is your decision to step in the market. Okay, so participation you control. But then more important than that, because that's kind of a given, a dumb fucking thing to say, you want to be here for a reason, and the reason is to be compensated for some level of risk. A lot of people write this level of risk off as being baseline, negligible, though, but it is very risky. But the one thing you do control is concentration risk. So people put everything, their entire portfolios, into UST, because why not? I know people that, it's horrible. I know people that put off paying taxes because the penalty of not paying taxes. Okay, so I pay taxes once a year. I have never paid, in all my time, I've never paid quarterly taxes. I do that because I've always beat the penalty. My accountant has always been like, this is a fucking headache, and I always have had to, explain that, one, you don't understand crypto to begin with, but two, that the penalty is so small compared to what I get out of this market, right? It's the same concept as, like, why would you pay for your house out in cash if interest rates are low? It's like, if you're a trader, you're beating that. You hopefully know that you're beating something that's a very low interest rate. So for a penalty from not paying your taxes, it's a very low penalty. So a lot of people were actually putting their tax money from last year that they should have put away into UST, thinking, well, by October, I will have generated I would have generated all my money back. or a significant portion of it. So this was horrific. I guess that's the best way to describe it. And this is going to draw a lot of regulatory ire and scrutiny. Obviously, Yellen talking about it today. Now, this is going to obviously bring more interest and acceleration for CBDCs, but I think it's not. I don't think it's a case where you're going to have no stablecoins in the crypto market. I think there are clear winners. I am confident in USDC, BUSD, and if you're not confident in stablecoins, right? I think USDC has the most traditional acceptance, which is what you're always trying to do as a new asset class. You're trying to get in with the people that are already in. If you're not confident in stablecoins, you don't have to be in them. If you have access to a futures account, and let's say you own BTC, and this is something that I do quite frequently so that I don't have to sell my long-term holdings. What you can do instead of getting into stables is, let's say you own $100,000 worth of Bitcoin, right? So whatever the conversion is at that time, you could sell that exact amount, contract for contract, in something like a perpetual swap or a linear futures contract. And if you don't have excess, what your underlying capital is, you're using that as margin, you're sort of a 1x exposure on top of that, your liquidation is essentially infinity. So, and this is because as price moves up, you're short position. If you 1x short your portfolio, as price moves up, and this doesn't mean 1x short your portfolio that's a basket of things, it means if you want to lock in USD for, specifically I'm talking about in this case Bitcoin, because there's different contract specifications for other altcoins, you essentially, your margin, since it's 1x, right, you're putting it up all as margin, is going up as the position is going against you. So it's constantly locking in that USD value. And this is what a lot of people do who don't have confidence in stablecoins. So this was obviously a huge event, and I'm going on such a long sort of long tangent, but it's not a tangent because this is the most relevant thing right now. There's a lot of fear and there's a lot of uncertainty, and this is actually what happens towards bottoms. You have a massive washout, a massive sort of shuffling of positions, weak hands to strong hands, and this is kind of necessary. It's horrible how it happened, right? How it happened in this fashion, and so many people were hurt. But honestly, this is the norm. People were destroyed in Peloton dropping, destroyed when Netflix dropped. This is a risk that you take by being in markets. Now, if I could sort of summarize this and paint maybe a positive light, or shed some light on a potentially optimistic future, it's that major collapses have happened in markets. In 2008, in March 2008, Bear Stearns collapsed. And in September 2008, Lehman Brothers collapsed. And Lehman Brothers and Bear Stearns collapsing was a thing that no one would have thought, no one would have saw coming. Of course, there's people that did, and they were doing the homework, and they were, if you watch Margin Call, right, there's always a group of people that knew something was up. And most of the time, it's going to be insiders, obviously, but you have people that are in the know, people that see these things coming, but it takes most of the market by surprise. A Goliath giant, masters of the universe, down to zero, out of business, and that's it. And that was back in, and just to put some perspective on this, we'll look at the SPX back in 2008. So this is March, right around here. All right. And then this is Lehman. Okay. Within a 1-year period, the markets had bottomed. All right. And they returned to up only. They're not up only because this is a weekly chart, and this is taking place over a 2-year period of the market being in a secular uptrend, though. Larger macro uptrend and a much larger clearly uptrend, but still. At that point, from those collapsing, the bottom wasn't too far off. A year is not a very long period of time. And if you're uncertain right now and you're worried about what's taking place in the macro, and markets are very thin and very sensitive, and the S&P just lost key levels, and I'm not going to be redundant and go over them again during the stream, because the point of the write-ups is I could actually say, do your homework, go to the last write-up, and you'll see exactly what I'm interested in the S&P. But one thing you can do is rely on and lean on tools that are, they're rudimentary. And I don't mean to say they're rudimentary like they're basic and they're primitive and they're not useful. They're very useful because they give you a clear idea of what the trend is. So you could use something like a 20 period, a 50 period on the weekly, and this has been very useful in the past. It's a lagging indicator though, right? So this is something that's not going to adjust until things have changed pretty significantly. But you can see in the past on the weekly, your crossover of your 20 and your 50 on the high time frame after major market structure breaks, after massive capitulation in markets, this has been actionable, right? There's no major capitulation until we go all the way back to 2008. Before that, you had, the dot-com bubble. So some people actually say that we're between 2001 2002 right now. We're in 2022 right now. That's what it is. Completely different context, similar environment, levels of risk taking, low interest rate environment, but this is a different context right now because of how high inflation is. But still, this was a good measure to identify, or metric to identify the turning point with. But again, it's lagging. But trend following has been a very rewarding approach to markets used by CTAs for the longest time now. It went through a period of not being very useful, but a lot of CTA strategies, you could reduce them essentially to longer term moving average crossovers, trend following approaches, time series momentum. And again, I think that this is, maybe something that you could take away some of the subjectivity of the market and use this and I guess get a more clean interpretation of where we are. Because right now it looks bad, right? It doesn't look bad. It looks horrible. Don't look at, and I'll look at the chat in a second, then we'll take a look at BTC. Don't look at the chart on a log chart. It's a survivorship index. It's replaced with components that succeed. It's going to be up only. It's going to look really disgusting if you zoom out. But there's a lot of participants on the way down that get involved that have way different expectations once we start hitting 30, 40, 50% drawdowns. So what that means is if you're a technical trader, it's very easy to look down here, right? Because if you're just a technical trader, applying sort of basic approaches that you would if you were looking at like market structure for BTC or alts in a technically driven market, if you're looking at this looks on the weekly like the next major area of support besides, this region right here. I've seen too many charts drawn like this. If we got to that point, there'd be a lot more things to worry about than what's going on in markets, right? You're talking about the complete, annihilation, decimation of 401ks, pensions, retirements, everything you could really think of. Let me just look at the chat and then we'll look at BTC. No, I should be, but my office is kind of echoey, so I apologize if that's the case. So if you click the Phemex link, in the taskbar up top, you'll see the complete link. That's just shortened, so it's easier to see, remember, but the full link pops up when you click it, and then you can see your invitation code. Yeah, I've seen Wintermute's posts. Wintermute's massive. They're on the leaderboard on FTX forever now. It's pretty insensitive comment to say, yeah, they would have liked to be behind that. I get it. Markets are adversarial. When it comes down to it, this is the way markets work on a low time frame, on a high time frame. Someone wins, someone loses. They're a negative sum game for most people, right? Because everyone loses to exchanges. and market makers, but this is where you are. You're in a jungle, in a very dangerous place. And they're not accommodating unless you know what you're doing. And they take most people's money back. In any kind of speculative run, if you have been rewarded without any skill, they probably are going to take their money back. So it is absolutely horrible. And it's more horrible when you consider the tone and demeanor and language that Do Kwon was using leading up to it. You know, if you don't come to the market with humility, you will leave. It will dish it out to you. So I think that's a really important reminder. I'm going to look at BTC in a second, right? But what I will say is that I had a conversation with someone yesterday, and I've been through my own shit. You know, people have lost all their money. Some people have, lost people. Everyone has something, okay? I've always said life, adversity is the stone that you sharpen your blade on, right? Life is fucking tough. And for everybody, it's tough in a different way. Everybody has their trial and their tests, one or multiple, and you have a choice. You either give up or you keep going. And at the end of the day, some people weather to that and some people give up and they'll say it wasn't their choice. But at the end of the day, it comes down to you. Unless you're dead, you have a choice. And I'll tell you from my experience and from seeing people around me, I've seen people come back from horrible experiences and rise to the top. And, the saying is sort of like, well, how do you do that? Well, how do you eat an elephant? That sounds like a fucking daunting task. Hey, you have to eat this elephant. Some people are going to look at the elephant the same way that people who are climbing a mountain might look at a mountain and think, I can't do that. Well, you eat an elephant one bite at a time. You climb a mountain one step at a time, right? You do the right things, though. You put one foot in front of the other, take the right steps, not just any kind of arbitrary steps. And if you're trading, it means you have to get tired of losing and doing the same dumb shit and over-indexing in one area, over-positioning in one area, over-leveraging. It's your choice, though, right? And some of you aren't cut out for this, but it doesn't matter if it's the market or something else. It's going to come at some point in your life. You're going to absolutely get floored. And you're going to see what you're made of. You're going to see if you have grit. And again, it's a really, listen, people will say, that's way too optimistic. You have to be a realist. No, you don't have to be a realist. You could be someone who doesn't want to give up. There are people that say you should be realistic and then they'll give up fast. Do you know that the people that actually do things tend to be irrational optimists? And the people that are realists, they might be right about something for the majority of people. They might be right from a statistical standpoint. Okay, but still, the people that are going to quit fast are those people that are realists, because they're going to say, I've done the numbers, I've looked at the attrition rate. This is too tough. I can't come back from this, and they quit. So they never know, right? They give up. Where the optimist, they get fucking floored so much that people around them tell them they should quit, right? If they're an entrepreneur, they're told they should quit. They're told they should give up. And they're so blindly stupid about their goal, they never do. So they finally get to that point where they succeed. I've always felt that is the case with everything. Everything in my life, it's been that way. Everything I've ever wanted to do is really fucking hard. It took a long time. And then I got to it and I was like, there's kind of a general thread between everything. Everything is the same in life. Whether you want to be a professional soccer player, a surgeon, a trader, whatever it is, play the best flute, okay? It's all going to involve sort of the same path. Horribly difficult for a long time, unrewarding. Keep going, keep getting up, keep getting up. You get up the 15th time, you're rewarded. This guy got up the 5th time, he's rewarded. Takes you 30 times, but they never give up. That's the common denominator between professional athletes. There's like a quit mentality that people have. And a lot of people are going to quit. People that don't will make it. That's the way it is. Right? You're guaranteed to not make your goal if you quit. That's all. So, not to go on a long rant, but I think that's really important, because if you're fucked right now, it can get better. It can get better. So as far as BTC goes, again, no major increase in open interest. There's a big FTX long that built up yesterday. No major increase in open interest. I don't see any kind of massive squeeze material. If we look at just market structure right now in the low time frames, and these are daily TPOs, but you're looking at the weekly structure right here. We had a break from big bounce and we had a break from lower time frame bounce, and right now that's acting as resistance. I think that we could see possibly a throwback to this point of control right around the range lows of 2021, 2022 originally, which was right around 31.6. But I would honestly look to fade any kind of immediate move up. Again, because if it moves up immediately, it's probably just mean reversion. And I don't think that it's anything where we're going to have some kind of major reversal and things massively change. Because right now, the S&P is flirting with 38.79, or at least the E-mini futures. And it's required for them to move up for us to move up. If they continue to nuke down, Bitcoin's just lagging. That's all it is. It's not outperforming, it's just lagging. So I would at least want to see for BTC, and this is for a bottom to form, at least the beginnings of multi-week bounce. So what you're looking at right here is the value area for the last week. So what you want to at least see is multi-weeks of inside value. Multiple weeks, excuse me. So whether it's one, whether it's two, arguably if it's a bottom, it's going to be months. So if anyone's thinking all-time highs in the next, says anything about, this is what I'm going to say. If anyone says all-time highs in the next month, if anyone says all-time highs in the next 2 months, if they're not trolling, just fucking delete them. Because it's not happening. And I'd say that as a person who knows conviction like that is silly, but it's just very unrealistic. You want to see at least a wide range carved out over a period of at least 1 to 2 months. And I think that that's very realistic. That's if we start moving sideways here, if we're going to call a base here. Otherwise, if we're going to continue to accept lower, look at this chart, right? There's no real support. There's nothing, not even a modicum of support, unless you're very generous around prior all-time high from a psychological standpoint. Other than that, it only picks up back down at like 12, 14K. And I know that's silly because that's very far away, but if equities continue to nuke, we're going into this gap. And again, prior all-time high, significant level from a psychological standpoint, not from a positioning standpoint. This market is very reflexive. It's more than likely that if we start accepting down here that people panic. I want to see for a bottom, and I think this could happen. I think it could happen faster than people anticipate. So we get the big splash, and then we start bottoming out, and then it's a long, drawn-out process. I want to see a candle that's disgusting. So this candle had a range of 20, 22%. That's great. This candle back here was nearly 40%. This is on the weekly. I want to see a daily candle or weekly candle that is like 20% and basically recovers almost immediately. Not recovers the entirety of the structure, but where you get something that we all know what it looks like. It's a disgusting looking candle, and you're left with a majority recovered, where you have something sort of like, going back to like March 2020. And I think those kind of flush outs are honestly, let me just fix this. It's my VWAP that's messing things up. I think those kind of flush outs are necessary. So this candle was, diabolical, 50%. I think that where we're hanging right now, if it's the case that we start reaccepting back within, back above 30 and we're putting support there, then yeah, short-term plays to the underside of the prior structure, prior multi-month composite, the whole first quarter, essentially. But unless we get back above that low and start showing that there's significant change in flow and a significant change in positioning, and again, the S&P has to be doing the same thing. It's more than likely that we haven't seen the worst flush yet, right? That we see some kind of major capitulation. And alts, I think that alts are going to we're going to see a capitulation across the board with alts, similar to what we had yesterday, but obviously more extreme. And I think you're going to get bounces in alts that are 50, 100%. So unless that happens, I don't think that we're there yet. I think that it's best to consider things like this. This is going on almost a year and a half. Yeah. Range. Okay. Trend, range, consolidation, expansion. The first leg, if it's committed and we don't see a reversal, it's really dumb to fade it. It's more than likely that this kind of change is very significant and is going to lead to much more significant change. Just how I said in the last two streams that this composite, if we broke outside of that composite, it's not some. If we break below, what I said was if we break below 37, there's probably a ton of liquidity down there. We're probably going back down to the prior summer lows. So we got that, right? Now it's the same concept of energy built up at the most important contextual levels in the chart. And this one's at the downside, obviously. It would have applied to the upside if it was, a case where we're at the highs. But this is the most important level on the chart from a participation standpoint. It defines every kind of participant you could think of, for the most part, besides long-term holders that are positioned from much lower. But anyone who's looking at this and saying the macro trend, from a swing position, from a positional standpoint, an investment standpoint, this is going to bring in a lot of change if we're committed below this low now. Because this was the most important level on the chart. So chances are that this increases, we see an increase in activity that gets behind this if we continue lower. And it's the idea of compression, acceptance, and expansion. So the idea that this move would be done, right, unless we see something change, in the short term, and it doesn't look like that. The idea that this would be done and over with very quickly strikes me as really naive. Give me one sec, guys. I gotta put you guys on an intro real quick. When nature calls, I have to pee really bad. So once. All right. Thank you. Whew, man. You're like sitting in a car ride or you're sitting in a movie theater and you're just thinking about it the entire time. So, as I said, it's more than likely that this is going to lead to a more significant move unless something changes in the short term. And this market isn't walking to its own accord right now. It's moving with the S&P. So as far as trading right now, this is going to actually be a really rewarding market to trade. Not we're going to be setting up for some great swing opportunities, I'm sure, once we put in some kind of splash, because markets do mean revert, right? It's just a matter of where, and the fact that this is the best location to define one. So unless we get back above 30, there's no real great area to define a swing within the structure, right? Sort of a swing failure, as Brent Donnelly says, a slingshot reversal. That exists higher, that setup. You could define it based on this low right here, but I don't know necessarily whether or not I would like to look at that, depending, considering how far we're off the low now. Now, clearly, you could size any position accordingly. But as far as trading goes, on the low time frame, I think it's a really rewarding market. I actually shorted, so I am short ape from up here. Let me see if I could. I don't want to dox my account info. One sec. So where is my entry? So my entry for ape is actually 844,688. Oh, you can't actually see it, it's below here. So I'm not gonna dox my account stuff. But my entry for ape is, I think I could actually scroll up and you could see I just wanna make sure you guys know I'm not bullshitting. So 844, oh, what we could actually do is change the tick size to 0.525, so you could just see basically where it is, right? So there's my entry right there. And this is, what I'm gonna be doing in the next couple of days is really just focusing on the lower time frames. And that's something that I do more often than not anyway, right? That's not something that I am not known for doing. But the difference is I normally have a generalist approach where I'm looking for trades a little bit more broadly, right? I'm just looking for lower time frame trades right now. I'm just looking to scalp, and I'm only looking to scalp in the pairs that the rest of the market is really interested in trading as well. So what this has meant for me today is I started looking at, initially I was looking at Solana, looking at AVAX, and looking at Ape. And I finally determined, okay, so Ape is something that is setting up reasonably where I think that this is going to have a good amount of liquidity. I'm actually going to close a little bit of this right now. There we go. I have another short on with BTC as well. But I'm just looking to trade the pairs that are liquid and where there's a good amount of activity, right? And where the volume is flowing, and that could change every single day, right? But it's going to be very short-term oriented, which is not something that's abnormal. I'll show you what I was looking at this morning with Ape. So this is Ape's chart right here. But we had a pretty aggressive move up. You had a squeeze up. The assumption is, let me just hold on one sec. Here we go. So the assumption is that we're not going to just about face and completely reverse. Hold on one second, I'm monitoring. I want to get a throwback and add more because I just pulled some off of it. Ooh, I actually just fucking flattened the entire thing. That's all right, that was good. Sorry guys, I'm like having monitoring it, and I didn't realize I just flattened the entire thing. Anyway, the idea is that we're not going to bottom and just V-shape reversal. So what we're going to do is probably bottom and have value overlap. We're going to move sideways, establish some kind of range consolidation, and probably poke these lows again. So what I saw was bounce, right? No swipe of yesterday's lows and a squeeze up. So we had a pretty thick point right around 9. I had orders all the way up to 950. So from 840 up to 950. And the idea was that we're going to get a throwback that maybe at most cleans this high, but we're going to end up coming back down here and rotating within this structure, and more than likely end up making a new low either way. But it's a chart that is attractive to trade from a structural standpoint, and the juice is flowing. That's the best way I could put it. There's going to be a lot of alts that are going to, and the reason why I'm focusing on this, and it's kind of like, all right, that's fucking obvious, everyone's familiar with Ape, is that there's going to be a lot of alts that actually bounce quite significantly, and it could be very easy for you to sort of get into like analysis paralysis mode where you're, kind of stunned. Like, what do I get in? Where should I focus? So unless you have a plan beforehand, and my plan is just to basically filter morning of, unless you have a plan beforehand, you're probably going to miss a lot of this stuff, right? Because it's going to be a move where everything happens very quickly if you're just looking to capture some kind of swing long, right? Longer term swing that will probably yield, a ton in terms of a percent. A bounce in alts moving forward. So the bounces that we get when Bitcoin significantly bounces, they're going to be huge because the books are really thin, right? You're going to have people that are really late shorting into the lows. And then because things are drying up, it's not going to take much money at all to get price moving back in the opposite direction. So I'm just focused on short-term trading right now. Unless BTC is back above 30K, I think that we haven't put in the low yet. Brother-in-law just checked into the ER. I'm really sorry to hear that. Yeah, if CPI comes in worse, then yeah, the Fed will probably be more aggressive. I think that there's a chance right now that we go to the June meeting and, or the next FOMC and what's it called? Because the idea is if markets are lower, that there's a chance they might be a little bit more dovish, maybe give us a little bit. It's a slim chance though. But just if I could just drive home one thing, it's that this was a big move. This changes everything. Listen, I've been calling this a bear market now for over half a year. I mean, I originally I said before we even had the May breakdown back here, I said that we weren't going to make, and this is back here. I said that we weren't going to make a new all-time high and that we were going to range for the next year or two. And we made a marginally higher all-time high, but we've pretty much ranged for this entire period. So now that we're accepting lower, it's like people are just honestly starting to say like, oh my God, we're going into a bear market. This has been a bear market by almost all measures that you could consider. At least for the last 6 months, it has been. There's a lot of people that sort of foresaw this kind of setting up. So it's not just beginning, but it absolutely is not just ending though. So if you're, for example, you're like, well, I want to get sort of the Pico bottom. Where is that? Is that 24? Is that here? Is it 15? Who knows? You're going to have probably, if you don't have, this is what will happen, right? If you miss this, you're going to have this for a long period of time. And this could be like a 30%, it could be a 20% range, right? This could be a big difference whether you got an over here. But at least you'll have a while to make this decision. It's not going to be a week. You should see, I think older things hopefully will still be relevant. So funding, you would want to see that it's very one-sided, right? That at least if it's not neutral all the time or negative all the time, that it's neutral. And that the market, that linear futures contracts are backwardated. So spot market trading above, those further out tenors, that'd be great. So front month trading above further out contracts. Skew being very negative. So if you're looking at 15, 20, 25, 30 delta skew, but those can be negative for a while before and the market continue to move down. But this is just sentiment, positioning, and then again, you'd want to see this, but you also want to see that the stock market has found some kind of bottom as well. So do you guys have any questions? Now, this was not the, a stream like the last two where I'm going into more of the local, lower time frame stuff, and we finally broke out of a major range. I think that personally that it's pretty clear that it's make or break right here. And it doesn't feel like capitulation yet. It feels like we're just getting started for what is a larger capitulation move to come. If I was to summarize where that means we are, it means like we're somewhere here thinking that that's the bottom, right? We're somewhere here thinking that it's bottoming here. So I personally, the response that I see right now, it makes me think 20K is, why not, right? Why not? But at the same time, this is the next major area of market structure. But listen, we'll cross that bridge when we get there, if we get there. But from just a volume standpoint, that's where things really begin to pick up. And meanwhile, within here, you're really left with, like I said, right around 24. it's the low volume nodes, these regions, like this 25 region that acted as support. So if it's not here, I mean, listen, I said listen like 3 times in the last 3 seconds. Just to be prepared, it could be an ugly print. But if the market moves sideways down here, and you see an accumulation of open interest, you see divergences in momentum and delta, then maybe it happens here, but it's not right now. Put it that way. You don't have to feel like a sense of urgency to get involved. As I said for the ETH merge multiple times, the whole idea with the ETH merge is that it was going to be really bullish, but I was saying that it doesn't. That's great, but it's a matter of where price starts moving up from. So people have been saying ETH merge is going to be bullish from, when ETH was above 3K. So are you buying? So is the ETH merge? Yeah, the ETH merge is great, but return geometric. It's a how do I put this? It's a matter of geometric versus arithmetic returns. So on the way to the merge, do you draw down another 50%? Because then it doesn't mean anything. You could get an announcement for the merge, and then there's a 100% pump leading into it, but at that point, ETH is at $1,500. So you get the point I'm trying to put forward. The macro momentum is in the driver's seat right now. When I'm trading alts, since alts are very technically driven, it's momentum and market structure. When I'm trading them on the low time frame zone, I'm not swinging them. I've started applying the same approach that I apply to BTC with alts, which is using a combination of order flow and TPO. With alts, the order flow is a little bit, I interpret it differently than with BTC, because they are a little bit more, they're in cases a lot more reflexive and more momentum driven. There's participants in there that are, Bitcoin's a little bit tougher to trade now. The depth of participants has grown, but they still trade. They still trade. You can still use the same concepts that I go over for BTC with alts. I focus a little bit more on delta leading and open interest than actually ever looking at an alt footprint. But TPO, market structure, all these ideas or approaches or systems. They're not systems. Tools are applicable. I never really understood like crowded trades or price levels in advance that people say everyone wants to buy it, so no one's going to buy it. The truth is that everyone says they want to buy a level, and then actually people don't. The exchanges that I focus on in terms of prioritizing are Binance, FTX, and Bybit. In that order. So with alts, I mean, the order flow with alts is, again, I don't look at like a footprint. It's more of like CVD funding and open interest than ever looking at an alt footprint. I just want to distinguish that because I could look at a footprint for BTC. It's not like a make or break for any of the trading that I do. It's as I said, it's the tape, but it's a tape memory. But with alts, I never use a footprint. I don't know why Phoenix whales are longing right now. My dog is crying in the other room. Any other questions, guys? So I think these bounces are, as I said, they're bounces. You have a bounce from basically front running a key psychological level. Price is extended. It's the more V that it is, the more likely I am to get really aggressive shorting it. And I want to clarify, there's nothing wrong with shorting down here. Considering what has happened in the market and what's taking place in macro, there are levels. I've said this and people question, oh, you said you shouldn't short here. Well, you have to be able to define the risk, right? It has to be an attractive position from as I say all the time, a contextual risk reward standpoint. So you could be right with the direction of the market. Okay, genius, that's great. But can you define a position around it that you could confidently hold and say, this is my invalidation and this is where this is where I want to get out. So I like to trade around levels that I can define closely with that. So that might be based on structure, and it might sometimes be based on what I think is maybe a single entity that got really long or really short. If I am saying that a trap is setting up because there's a really big entity buying on Binance or FTX or Bybit, and they are responsible, it looks like, for a significant increase in the open interest, and let's say they're long through a level, that's my invalidation a lot of times. Their invalidation is if they are right, then I'm wrong. So if I'm trading on behalf of, in that case, a significant increase in positioning and involvement, then if price comes back towards their level and they're not underwater anymore, that's my invalidation. And then there's structural invalidations, right, that are more common. Then there's volatility based and moving average based, and volatility like percentage or ATR. So I like to get involved in areas that I can cleanly define. It doesn't mean I'm not going to short this low if, in what case I think it's going lower. And if we get a vertical bounce, I doubt that we have a vertical bounce that, again, comes back up to the top of that range. I hate to say that because, damn, if there's one thing that ever does that, it's BTC. But I just think that unless the S&P does that, Bitcoin doesn't do it on its own. It could be the case that happened on its own. If there was a really standout level of open interest, let's say, for example, in this region. So I'm just going to switch it up real quick. Then we're going to end it and do the call in about 20 minutes. So this is just, hold on one sec. This is TRDR. So this is books across all exchanges. This is order book depth and spreads. This is Coinalyze, and then these are obviously XO, and that's FTX, and that's Binance. So specifically, if we're just going to look at in aggregate, this is APE because I was tracking APE. Obviously, I was short APE. If we zoom out, it's not like we have any kind of huge pickup to squeeze. And that's what you need, right? If this is going to be a swing failure that has any kind of real overthrow, you need to know that there's a lot of people that got involved down here. You don't have any of that, right? I mean, let's just be honest. If we look at prior lows and their relative increases, so what were two great squeezes in the last couple weeks, and I pointed them out and talked about how they're really obvious. This low and this low right here. And you see, one, if you were looking at it during that period, you see there was actually a shift in the flow between spot and futures at the low. So there's a pretty obvious divergence, in one case more than the other with Delta. But in both of them, there was a large amount of open interest that accumulated in that region. So once you start trading above it or below it, whatever side is aggressive and whatever side at that point is, clearly there's one side that's really wrong if you're well away from where the open interest came in. So each of those led to significant squeezes that had lasting follow-through. And just here's the open interest from where we are now, right? So that was 151 BTC up to, my camera's in the way. I don't know what that's at. What is it? It's like 160 something. It's like 10K BTC. And look, these are the lows we're making right now. And there is no material change in open interest at all. So you don't see any of that yet. You had tiny little squeezes. And then another appropriate thing to look at, be funding. There you go. Funding has just started to go negative. Leading into this, it was positive leading up, right? That wasn't positive, though, that because there was like a bunch of derivatives getting long and buying on the way down. It was positive because actually spot was leading the sell-off. So you would ideally want to see that shifts. This is not as useful, but I do like to pay attention to, exactly how the book is responding and if there's any kind of participate or if there's any kind of observable depth at all. In some cases, like Coinbase recently, there was none. But you want to see something build up, and there's really nothing that's building up right now. Whereas, this move, I'll pull it up here because I'm on the other screen right now, forgetting that if we go all the way back to last year, there's a way different situation. So all the way into this low, you had a big increase in open interest. Throughout this structure, this is the open interest for that structure, right? And as we've broken down, we've wiped some of it. And it hasn't been the case that, it's clearly longs closing out is a good amount of it, but it's not, there's no major squeeze fuel to the upside. This all makes sense, guys? Probably going to wrap it up. I asked you a question. Yeah, man, I'll get to your questions. I missed some questions. It is what it is. You could hop on, call in if you want to ask them. But I see your question. Thoughts on Bitcoin becoming any of the many reserve currencies? If you look at just currencies globally, it's like what? It's a top 20, top 15 currency. I don't know about it. I think ultimately it does get tied into reserves. But I think we're not there yet. In other economies, it's been adopted, but that is a far different situation than where we are. In the economy, that is, if anything, it could lead to a knock-on effect and its adoption slowly, but not by the Federal Reserve yet. Real quick, and then I'll do the call-in. So a Dalton setup is, I'll go to the profile. So when you're looking at profile, you're identifying context, whether price is in a rotational or trending environment. It's just a tool, right? It organizes the data. So it gives you a better idea of context and what condition the market is in, whether it's trending, whether it's ranging, whether we're establishing value, whether we're not, whether we're imbalanced, whether we're balanced. A Dalton setup is basically reacceptance into balance. So usually it is, and here is I'll go back to BTC because it was potentially setting up. Usually what you want to have is a case where you had balance that price temporarily broke outside of. In legacy markets, it would imply that overnight it had reopened outside of the prior day's value and then reaccepted. So you'd look at something like a composite or an individual day, right? So if it was an individual day, here's, let's say, a balanced day. We'll just find a case where Dalton setup actually came to fruition. So this is going through prior day's value, but I want to find something where it's very balanced and then opens up outside of value. Hold on. Okay. So this is not a great example, right? But it does ultimately lead to the setup, but it doesn't give you the full TPO, 2 TPO rotations into a trigger, which is like a very old trigger either way. What you're seeing is price is balanced, and the trend is to be balanced, right? The expectation is that value is being established, buyers and sellers are in relative agreement. Any kind of deviation outside of that gets reaccepted into it, it's kind of a carve out. So it's very easy for price to fall back into the same pattern it was, which is to be rotational and to sort of cover the same value area that had been established the day prior, or it could be multiple days prior, and it could be, a composite. So here's, let's say, 2 days of balance that have formed. So you have mostly value overlap. So most of the value is overlapped. So you might have one value that's slightly outside of the prior, but you have 2 very balanced days. Could be an inside day too, right? It could be a case where the range is entirely engulfed in the prior. But either way, let's say this day transitions like this, closes after the second day outside of value. So here's your value area low, here's your value area high. The setup is that 77% of the time, when you reaccept back inside of the prior day's value, so you're looking for acceptance, it could mean that you poke through and it's absorbed right away from the underside if sellers try to walk it back down, but it's absorbed. The idea is that the presence is accepted back within here. So some people use like a 30-minute close within, some people use an hourly close, some people just are very price action oriented and just look for signs of price action reclaiming that level. The idea is that when that happens, 70% of the time it covers from one side of value to the next. And it's basically when price falls back into value, it's going to do what it did previously, which is cover from one side of the range to the other. This is how, and if you notice, this is the concept I apply to ranges on the high time frame and the low time frame. So I got to wrap it up though. I got to take a quick break before the call in. It'll be a half hour long. This is called the TPO chart. But the link is on Twitter. We're going to wrap it up. Thank you for tuning in, guys. If you're not already subscribed, make sure you subscribe. We go live again here on Tuesday. Calling right now in 15 minutes for half an hour, right? And this is AVFR. Weren't you the guy who was like talking shit a long time ago? I'm looking through the chat. I might have missed something from you. But thanks, Ryan. Love listening to him, LARP. You're welcome, AVFR. Antagonistic guy from the chat. But then I have a call in again tomorrow. So that's same time. All right, dudes and dudettes, ladies and gentlemen, I'm out.